Welcome everybody, this is the speculator at Take Your Profits. I'm going over another trade that I took Sunday at the market open on a trend following system that I have purchased, and although I don't, it's a separate account that I keep with Forex.com, and although the rules of engagement are not outlined in detail on this website yet, I have taken trades, and I do need to keep track of the performance of those trades. So getting into that, let's go over to the chart to ask ourselves, well, to ask myself the question, the two questions that I have to ask myself of every trade that I take, and is number one is, did everything go as planned? Well, this is the US dollar Swiss franc market, and the plan was based on the visual signals given to me by this trend following system that I did purchase from a vendor that runs within the NinjaTrader platform. The NinjaTrader platform, by the way, allows me to execute my trades using an automated trade management system, as they call it, which once I set my orders at the predefined levels, executes my orders and sets my protective stop orders and profit target orders simultaneously, while automatically managing my protective stops and allowing me, the platform allows me to input parameters that will move my protective stops to break even once my first and initial profit targets are achieved. So basically that was the game planned on this trade. In this case, based on what is known as the first strike entry, which is shown here by this particular downtrend, and which is also confirmed up here by this downtrend on the higher time frame. This is a 4-hour chart. I use a 4-hour chart and a 1-hour chart as my trading time frame to confirm the actual execution of the trade, as I do with most all my trading activities. In this case, the plan was to, well, the signal calls for the selling of 3 contracts here at this volatility band known as the FD 2618 level. I believe I ended up selling somewhere here at this level at a significantly better price. It also calls for me to protect my orders here above this red line, which is another volatility level. What happened was that the market, as I entered here, the market continued to move against me, and as it did, the system calls for a single order to be sold at this line here, this yellow line here, which is another volatility level known as the FD 3618, in which I did. I shorted the market with an additional contract on an adverse excursion position, as they call it. Therefore, averaging on the 4 contracts that I held, the price was averaged somewhere around this level at the 78.77 level. So the plan was, based on the entry signal here on this candle, and based on the ATR measurement here of 47 pips, as you can see here at the green line below, 47 pips. Instead of using 47, I rounded it down to 40, and then I tried to consider the amount of commissions and spread I would take. So I ended up setting my targets 36 pips below this first volatility line. I set it 36 pips below the 58 level at the 78.22 level, which was right here. And the second target was 36 pips below that, and actually it was a little bit more than 7, because I left it at the 78.05 or 04 level, somewhere around that, just to be above the 78 psychological level. What happened was that the market moved against me. I took another position short for the Adverse Excursion Trade. Market moved against that position a little bit more, and then it started moving in the anticipated direction. On this candle right here at about 3 a.m. the market hit my Adverse Excursion profit targets, which on the one contract is set at this first volatility band. So I was back to holding 3 contracts again after earning about a 20 pip profit on this Adverse Excursion trade from here to here. That was the only win for this trade. That's the only part of the trade that went exactly as planned, because then the market did continue to consolidate, and then it did move again in the anticipated direction. It moved all the way down to 78.18 past the 78.22 profit target level we had. However, although this candle did hit our profit targets, which by the way did cause the automated trade management feature within the NinjaTrader platform to move the protective stops above this red line, which is the FD4618 volatility level. It caused the protective stops to move from here to break even at around this 78.72 level roughly, on this particular black candle right here. However, although the shadow of the candle did go all the way down to 78.18 and my targets were at 78.22, because of the actual spread in this market on the forex.com account, let's see if you can see that. The spread on the US dollar Swiss franc market in the forex.com account is a difference between 78.57 is the ask and the bid is 78.52, so that's about 5 pips and change. So therefore, if my target was at 78.22 and the market only reached to 78.18, my first target did not get hit, which is unfortunate. Over 2 pips of commission that forex.com needed to earn, and that's a little bit of ignorance on my part, although those spreads and commissions do fluctuate. However, I was not taken out here for a profit. I had already earned a 20 pip profit with the Adverse Excursion Trade. My protective stops did move to break even, and on the very next candle, on this candle here, I guess that's the 11 a.m. candle. Yep. The 11 a.m. candle took me out on break-even stops for, I believe it was a small, possibly a 2 or 3 pip gain on the BMR trade, which was the trade against this first volatility level shown in black. The only thing that could be done to improve this trade is to set those targets, whatever my ATR reading measurement gives me, is to set the ATR, again, 10 pips above that. Some of these ATR measurements are only 30-40 pips long, and the protective stops aren't even that much. So that's something I'm gonna have to look into. However, I did need to record this particular trade into my log here. It was a winner by 20, let's say it was probably 22 pips, not much, on one contract, so it was not much at all. It did go as planned on the Adverse Excursion aspect. It did. I broke even on the BMR trade, so that's a wash. It didn't go as planned because I didn't turn a profit, and I didn't turn a profit because I did not set my targets loose enough to account for the spread and commissions taken by my broker. I missed it by 2 pips. It happens, and it's just something that I'm going to have to adjust to when dealing with the actual mechanics of trading within the NinjaTrader platform, using the particular brokerage that I'm using to trade this particular account that is being tracked separately from the rest of the trading authorization numbers that I have being logged into the rest of the website. So the only thing I can do to improve on this particular trend following system, which I did purchase, which I do want to start using as part of my my trading strategies that I have developed. What I can do is to be more aggressive in how I set those targets in order to account for the aggressive commissions I'm being charged to trade this account. So I'm going to go back to the ROE at point number 1, and that for the CTS system that I'm trading, I set my targets 15 pips in advance of the measured targets. On this trend following system, I don't want to do a 15 pip method. We're just going to go ahead and go with a 10 pip spread. We're using 10 pips to cover the stops, so we're going to use 10 pips to let's call it front run. We're trying to front run the targets by 10 pips. So that's what I can do to improve on this winner. I appreciate you taking the time to watch this video. Hopefully my trading will help you improve your own trading. Thanks again, and don't forget, take your profits.